Assalamualaikum warahmatullahi wabarakatuh. We are from Group 7, which is Bentham, and today we are going to present about accounting scandal in Malaysian company, which is Mega Media Berhad. Without further ado, let's move into the next slide. This is our team members, consists of 6 people, starting with Syihab bin Faisal, 1220607, Muhammad Ikmal Wafi bin Abdul Aziz, 1220675, Muhammad Irsyad bin Muhammad Basri, 1220676, Muhammad Aliff Aiman bin Azmi, 1220685, Akmal Hafiz bin Ahmad Saifulazhar, 1220701, and me, Muhammad Zaharin bin Ismail, 1220703. Now, we are moving into background of the company. Mega Media Berhad was established in 1994, initially focusing on the production of plastic injection components as well as part for the electronic and automotive industries. Just 2 years later, in 1996, the company expanded its operation by venturing into the manufacturing of multifunction disc and video tape through its subsidiary Memory Tech Sdn Berhad. Continuing its growth in the data storage industry, Mega Media further expanded into the production of CDR and DVD-R formats in 1999, keeping pace with technological advancements. In recognition of its growth and contribution, the company was listed on the Kuala Lumpur Stock Exchange under the industrial product sector in August 2000. Notably, Mega Media also became the first Malaysian company to be awarded pioneer status by the Ministry of International Trade and Industry, reflecting its significant role in advancing Malaysia's technology and manufacturing sectors.
The chronology of the accounting scandal of Mega Media started in 2006, where Mega Media, a major optical media disc manufacturer, reported unusually high revenue, which is 1.03 billion ringgit for the financial year ending 30 April 2006, or the detail 230 million ringgit in quarter 2, 238 million ringgit in quarter 3, and 306 million ringgit in quarter 4. Analysts and regulators noticed inconsistency between reported revenue and actual cash flow, trade receivable and inventory level. In the next year, which is May 2007, share price plummeted by around 85%, raising alarm among investors. And the next month, June, Mega Media failed to submit a regularization plan to Bursa Malaysia under PN70, indicating it was in financial distress. In the August, Mega Media was officially classified as a PN70 company for financial instability, and the late year 2007 investigation by the Security Commission Malaysia (SC) revealed the company had falsified financial statement and inflated revenue figures to mislead investors and regulators. The SC charged several top executives, including Datuk Dr. Muhammad Adam Cik Harun, Executive Chairman, Kenneth Kok Hansen, Group Financial Controller, and Josh Yeo Wee Seong, Executive Director, Interpol Alert Issue. While in the 2008 June, Mega Media was delisted from Bursa Malaysia after failing to comply with regulatory requirement or restructuring its finance. The case does not stop there. In May 2017, Kuala Lumpur Session Court found Datuk Dr. Muhammad Adam guilty of finishing false financial statement under Section 122B of the Securities Industry Act 1983. He was sentenced to 18 months imprisonment and 300,000 fine, in default an extra 12 months in prison. In 2019 June, on April, the High Court reduced the jail term to 6 months while maintaining the 300,000 fine. Unfortunately, in 2020 September, the Court of Appeal overturned the reduced sentence and reinstated the original punishment, which are 18 months imprisonment and 300,000 fine.
Next, what's the legal implication on Mega Media Holdings Berhad? There are 2 individuals involved in this case, which are Datuk Dr. Haji Muhammad Adam Cik Harun, who is a former executive chairman and director of Mega Media Holdings Berhad, and Kok Hansen. So first, Datuk Adam was accused of providing false information regarding the quarterly revenue for the financial period on ending 31 January 2007. So the actual report revenue was 306.15 million, but more than 75% of the amount, which is 2028 million, was illegally fabricated. So the first statement involved the company income, and it was intentionally made to mislead the market. So this offence fall under the section 122B of the Securities Industry Act 1983, read together with section 122 of the same act. So on 17 May 2017, Datuk Adam was convicted, sentenced to 18 months imprisonment and a fine of 300,000. So later on 21 June 2019, the High Court upheld the conviction and fine, but reduced the prison sentence to 6 months. And then on 15 September 2020, the Court of Appeal dismissed the Adams appeal and reinstated that 18 months prison sentence and 300,000 fine, emphasizing that his age, which are 76 years, and health condition did not warrant a lighter sentence. The Court of Appeal actually agree with the Security Commission that submitting false statement to Bursa Malaysia is a serious offence that goes against the integrity of Malaysia securities market.
The second convicted in this fraud case is Kok Hen Sen. Kok Hen Sen pleaded guilty in August 2009 to creating false revenue figures for the financial year 2006 and from quarter 1 until quarter 3 of 2007. 1.034 billion ringgit was reported in MMHB and its subsidiaries' financial statement for the year ended 30 April 2006. 230.365 million ringgit was reported in MMHB's quarterly report on consolidated result for the financial period ended 31st July 2006. 238.134 million ringgit was reported in MMHB's quarterly report on consolidated results for the financial period ended 31st October 2006. 306.150 million ringgit was reported in MMHB's quarterly report on consolidated results for the financial period ended 31st January 2007. He was charged under Section 122B, Subsection A, Subsection BB, read together with Section 122, Subsection C of the Securities Industry Act 1983. He was fined 350,000 ringgit or sentenced to 1 year's imprisonment. The Securities Commission (SC) appealed, arguing that the penalty was insufficient given Kok's role in fabricating invoices that deceives bank and investors.
Alright, now I'll be presenting the key factors that contributed to the accounting fraud at Megan Holdings Berhad. This scandal, one of the largest in Malaysia's corporate history, involves systematic financial manipulation and governance failure. Let's go through the four main factors. Alright, firstly, deliberate falsification of financial statement. The company's management deliberately falsified revenue figures in its financial statements submitted to Bursa Malaysia. For example, in its quarterly report for the period ending 31st January 2007, Megan Media reported revenue of RM306 million, out of which RM228 million or 75% was entirely fabricated. Similarly, the audited financial report for 2006 stated a revenue of RM1.03 billion, which was later restated to RM712 million after the fraud was exposed. This manipulation was achieved through the creation of the fake invoices, fake sales, and overstated inventories to present a misleading financial position. Alright, we move to the second factor, which is collusion and direct involvement of senior management. The fraud was orchestrated at the highest level of the company. Executive Chairman Dr. Muhammad Adam Zaharin and Financial Controller Kok Hen Sen were both directly involved in falsifying financial reports. Both were charged under the Security Industry Act, and in 2017, Datuk Adam was sentenced to 18 months in prison and fined RM300,000. This sentence was later reinstated by the Court of Appeal in 2020. Kok Hansen pleaded guilty in 2009 and was fined RM350,000, with the Securities Commission appealing for a harsher penalty. Alright, we move to the third factors that contributing to the fraud, which is weak internal controls and effective corporate governance. Magan Media's internal audit department completely failed in its duty to detect or report the manipulation. There were no effective internal controls in place, and management was able to easily override the existing procedure. This lack of oversight allowed falsified invoices, embezzlement of company funds, and irregular financial statements to go unchecked for years. And lastly, the fourth factors, which is deception of financial institutions and misuse of funds. The falsified financial reports were used to deceive banks and secure trade financing based on fake transactions. Company funds were then diverted to unrelated parties through fictitious payments and questionable asset purchases. For instance, there was a supposed RM211 million deposit for production lines that couldn't be verified, and trade receivables amounting to RM334 million that were essentially uncollectible. Alright, in conclusion, this scandal highlight how senior level collusion with corporate governance or internal controls can enable large-scale financial fraud. It reminds us of the crucial importance of robust corporate oversight, responsible auditing, and timely enforcement to maintain market integrity and protect investor interests. That's all for me. Thank you.
So now we will discuss on the role of corporate scandals in shaping accounting standards and the profession. Corporate scandals like Megan Media Berhad don't just cause the financial losses, but they leave lasting effects on the accounting profession and the standards we rely on. These events become turning points that trigger reform, strengthen regulations, and redefine professional ethics. So we'll go to the first point, which is trigger for regulatory reform. The Megan Media scandal exposed serious loopholes in corporate governance, financial reporting, and auditor independence. It will result in pressure regulators such as the Security Commission and Bursa Malaysia to tighten compliance requirements. The example of reform which is post-scandal, Malaysia reinforced compliance with FRS and later MFRS, aligning more closely with international standards which is IFRS. The second point is enhancing financial reporting standards. It will impact on the standards in increased emphasis on fair presentations, substance over form, and disclosure. For example, stricter rule on inventory valuation, revenue recognition, and related party disclosure were enforced to prevent manipulation like what happened at Megan Media. Companies were required to improve the quality and transparency of financial statement, especially for asset-heavy firms. And the next one, which is point number 3, greater accountability for auditors. Megan Media's case also highlight the weaknesses in the audit process. This scandal will reinforce in professional skepticism as a critical audit skill. Importance of independence from management and calls for rotation of audit firms to avoid over-familiarity. It will result in audit committees become more independent and audit firms face higher regulatory expectations. The next point is education and ethics in accounting. Scandals like Megan Media encourage professional bodies like MIA and MICPA to strengthen ethics training, promote codes of conduct and integrity, and encourage whistleblowing mechanisms within firms. MIA bylaws on professional ethics were updated to include clearer guidance on responding to non-compliance with laws and regulation, which is NOC/LAR. The last one is global perception of Malaysian accounting. Scandals damage investor trust in financial reports. Megan Media's collapse lead to calls for global harmonization of standards and better enforcement in emerging markets. Malaysia took action to restore investor confidence, including in supporting convergence with IFRS, and boosting training for accountants and
In
auditors.
conclusion, the downfall of mega media berhad shows how serious the impact can be when a company lacks strong ethics, proper financial control, and good governance. The company's actions, such as overstating its revenue, creating fake assets, and misusing borrowed money, didn't just break laws and accounting rules, but also destroy the trust of investors and the public. This wrongdoing led to legal consequences, criminal charges, and eventually the company being delisted from the stock exchange and shut down completely. However, the scandal also became a turning point, pushing regulators and the accounting profession to tighten standards and remind everyone how important honesty and transparency are in financial reporting. That's all from us. Thank you for watching.